Hey everybody, this week on the Business Owner's Corner, I'd like to chat for a few minutes about long-term care insurance. Long-term care insurance is growing in popularity around the country. More and more of us are going to need long-term care services at some point in our lives. And for some people, an insurance policy can make sense. It doesn't make sense for everybody. Your profile has to fit a specific definition, in my opinion, for this to be halfway attractive. But if you're interested in a policy and you own a business, there are a few things that you ought to know. Number one, when it comes to deducting premiums, you might be able to deduct the money that you put into one of these policies. The IRS gives us what's called an age-based premium deductibility limit. And what that means is that this year, if you're age 40 or younger, the first $450 of your long-term care premiums you can deduct as an itemized medical expense. Once you hit age 40, that number goes up to $850. Once you hit age 50, it goes up, and you can deduct a larger and larger amount of long-term care insurance premiums the older that you get. Now, it's an itemized expense that's subject to the 7.5% AGI floor. That's a lot of numbers and a lot of nonsense. What that means is if you have an adjusted gross income of $100,000, if you have medical expenses that are deductible, you can't deduct any of them until they exceed 7.5% of your AGI, or in this case, $7,500. So if you don't have any other medical expenses for the year, you put $2,000 into a long-term care insurance policy, I'm afraid you're not going to be able to deduct them as an itemized medical expense. But if you have $10,000 and you make $100,000 in adjusted gross income, you have $10,000 in medical expenses, that means that you get to deduct $2,500 worth, anything above that floor. Long-term care insurance premiums are considered a medical expense in this setting. Now, if you own a business, you can deduct more of the premiums. If you're a sole proprietor, then you can deduct, if the business pays for the policy, then you can deduct 100% of the premiums up to those age-based premium limits that I mentioned earlier. So you're not subject to the 7.5% of adjusted gross income floor, but you are subject to the premium limits that the IRS gives you. Now, if you're a partnership or an LLC taxed as a partnership, or an S corporation or an LLC taxed as an S corporation, you can deduct 100% of the premiums as long as the business pays them. So the business pays for the premiums. That shows up, if you're the 100% owner of the business, that shows up as income to you, but you get to deduct it on your Schedule 1 just as you would a deductible medical expense. So again, if you have an LLC or a partnership or an S corporation, now you get to deduct 100% of the long-term care insurance premiums. You're not subject to the 7.5% of AGI floor, nor are you subject to the age-based premium limits if structured properly. If you have a C corporation, same thing. The business can pay the premiums, no premium limits as far as age-based premiums or adjusted gross income thresholds. Now, the reason this is so cool is that this just makes long-term care insurance policies a lot more attractive. If you're someone who's kind of sitting on the fence, you're not sure whether you need one, kind of ho-hum about it, well, if you can deduct the premiums, that makes the policy a heck of a lot more attractive. Now, again, this isn't a good fit for anybody, but unlike a lot of your other health and medical benefits you might offer through the business, remember, if you have a 401k plan, you have to offer that equitably across all your employees. If you have a health insurance plan, you have to offer that equitably across your employees. A long-term care policy, you can discriminate. You don't have to offer it to everybody. You can set it up just for yourself. You can set it up for yourself and maybe a couple key employees that you want to stick around as an extra benefit. You can be discriminatory in this fashion and still deduct the premiums, and that can be a powerful economic motivator for a lot of people. So a little bit of technicalities on this week's Business Owner's Corner, but if you can deduct the premiums, long-term care insurance policies become a little bit more attractive, and that might be a good fit for you.